thank you to Hatch for facilitating this. I think it's a great series and very valuable to a lot of people. And also thank you to everyone for joining. I'm from mainly Sri Lanka, but from what I understand, also other countries. So thank you for your time. Basically, this session will be an hour long, and I think I'll try to reserve as much of that as possible for Q&A. So you guys can obviously ask very specific questions, and we'll try to address those as best as possible. Just before I dig into it, just a quick intro about myself, as Suresh already summarized, and just so you understand where this is coming from in terms of my knowledge and advice, etc., that I'm sharing with you guys, and opinions that I'm sharing with you guys. So my background, as Suresh said, fundamentally, I'm working very hands-on in a very hands-on fashion with technology startups, largely early stage. So I'm involved in a lot of companies, not just in advisory, but actually helping to grow their business at a very deep level. My background is in a combination of management consulting and venture capital as well. So I've sort of been on the business strategy side, execution side, as well as on the investment side of things. And prior to that, I was with Apple as well. So I try to bring a lot of that experience to help founders to basically empower really passionate founders trying to solve big problems, and use the boring experience I've got in business strategy, etc., to help them to bring those to life and to scale their businesses and to solve big problems. Of course, I'm also very much involved with Hatch, and at the moment, I'm actually working with Hatch on a fintech accelerator, and I believe a couple of the founders from that accelerator are in this webinar as well. So welcome to you guys as well. Okay, so let's jump straight into it. First of all, some context about this webinar. Because it's quite a short, well, it's less than an hour, right? For those of you who know me quite well, or have seen me in action either as an advisor or a presenter, I like to get into a lot of details, but I'm trying I painstakingly avoided details in this and tried to stick to very high level. It is basically focused primarily on implications and based on the environment that we're in because of COVID-19, right? And that's obviously the theme of the Resilient series of webinars by Hatch as well. Having said that, it's applicable to pretty much any recession or downturn or a difficult market environment. So a lot of these are really fundamental business principles that apply to all environments. But obviously, because of the extremity of the current situation, the intensity at which you have to consider this is much deeper than usual. Okay. It's geared slightly towards tech startups, and that's largely because of my specific experience and expertise recently in that field, and therefore the examples and context I bring you is more relevant to tech startups. Having said that, as I said before, just like with any other environment, this is applicable to any business. So a lot of these are fundamental business principles. Okay, so don't think just because you're not part of a tech startup or you're not a founder of a tech startup that this isn't applicable to the way you do things and to the way you contribute to a business. So we're not going to get into too many details here in the best interest of time. What I consider the main priority of this is a combination of giving you guys principles to enable you guys to think through things the right way and to be aware of things so you make informed decisions, right? And the more practical takeaway from this is think of it as a checklist, right? So I've tried to make it very holistic. I've tried my best to try to incorporate all the different high-level things you need to be aware of. So I guess what I really hope you take out of this is almost an exhaustive checklist of things to go through in your own time. And my almost guarantee to you is if you consider all of the things that we bring up here and you execute on those, then you will go very far in not only protecting yourself from the situation, but also benefiting from the situation, right? However, the big caveat there is the outcome you guys take out of this is only as good as the execution, right? This is really theory only. Words are words until uh, they really executed on, and that's when they really become valuable. So in terms of the execution and taking this deeper, Hatch obviously does a wonderful job in giving you guys access to mentors and their resources as well. I'll try to make myself available to you guys as much as possible, right? I'll share my details at the end of it. If you do need guidance on how to take these principles and how to apply them in a very specific way to your business, right? Okay, so that's the high level context. Now let's dig into the content itself, right? I've divided into about 5 subcategories of things, of buckets of areas, right? That I think we need to check off. Okay, cool. So let's jump into it. First of all, and this is, in my opinion, by far the most important exercise you have to go through, and the most important principle, I guess, right? And this is something every founder should be doing, in my opinion, right? If you haven't done this already, make sure you do this very soon. In a very analytical way and a very structured way, try to understand all the implications that this environment is having on your business, right? The key point here is that not just COVID-19, but a recession and a downturn has different implications on different types of businesses, depending on geography, depending on sector, depending on the use case they're solving, depending on how mature they are, and various other factors. So make sure you apply this exercise to your specific business and spend some time on this. I cannot emphasize this enough, right? So I've listed here what I think are the different components you need to think about, right, in terms of how this affects your business. First of all, users and market, right? So an example or a principle around this is, how is this affecting your existing users, your ability to get new users, and the revenue you're making from users, right? So, for example, many businesses who might be in the travel sector and the hospitality sector are suffering much more greatly than other sectors, and obviously you need to do that analysis yourself, right? A practical tip here that I would recommend is list out all of your existing users, right, and your potential users, and categorize them, right? So this is an exercise I've done with all the startups I'm working with in detail. I've gone through all of their customers with them and categorize them into 3 categories, basically. One is customer segments that are very likely to be affected like this in a negative way, right? Second bucket is customer segments that are likely to be affected or maybe not too much affected to a material extent, right? And the third are customers that are likely to benefit from this, right? If you understand that about your users and market, that's a level of intelligence that will help you to make a lot of good decisions going forward in this area, right? So once you understand that, the next step could be, for example, there are really 2 next steps to that. One next step is, for business development and marketing purposes, refocus your attention on customer segments that are less likely to be impacted from this or benefit from this, right? The second thing to do is, for your existing customers, try to get them onto long-term agreements with you, if that's viable in your business, right? Especially for the vulnerable customer set. Okay, so that's I think not a too difficult of an exercise for you guys, but immensely valuable if you do it properly, right? I would do something similar with suppliers as well. The key thing with suppliers here is really identify your supplier risk, right? Are there vendors or suppliers that your business is relying on that could be affected by this? And if so, you need to address that ASAP, especially if they are fundamental to your business, right? Okay. Operational risks can include a lot of types of things, right? One of the obvious things here is in Sri Lanka, for example, and in many other countries, is because of the work at home restrictions. How does that affect your ability to manage your team, your ability to access services and things like that? All right. So understand how at different parts of your business, it affects your day-to-day tasks and your operational risks. Okay. And list all of those things down. And then there's the brand risk as well, right? Based on what your the perception of your business is in the public, right? What are the risks to your brand, and what are also the benefits to your brand in this situation, right? If you're seen as an innovative company that, for example, pushes principles such as working from home or virtual, etc., you stand to benefit from this, right? And there are other components as well to be aware of there, right? Macroeconomic principles are, anything to do with the economy, basically, or regulations, or things like currency. Right? Understand how those things apply to you in different ways. So, for example, if you're in the travel sector, again, an obvious example is this is a very basic example, but it's just something that you should apply to your business. If you're in the travel sector, there's less travel, right? That's the obvious thing. Then you get into more deeper things, such as where do you see currency risk going in the next few years, for example. I've got companies, for example, who I'm speaking with, who have US dollar products and who have customers in, say, the UK and Australia, right? Who want to pay them in Australian dollars, who don't want to pay in US dollars anymore, right? Because of their perception that the Aussie dollar is going to go down in the future, so they might lose money. So factor in those things from your customer's point of view, but also factor them in from your point of view. If you do take a certain currency over others at the moment, what's the implication of that, say 12 to 18 months, or 6 to 12 months actually down the line, where there will be a lot of currency volatility, right? There are other factors here as well, such as regulatory things, right? If you're in Sri Lanka, payments is a space that's moving very fast, and there's a lot of noise happening there, but at the same time can have a massive implication on your business depending on how this is going to change, right? Keep an eye on those elements that are changing or accelerating change as a result of this, okay? And of course, capital, right? I think it's needless to say that cash and capital are very fundamental components of this, all right? And this is impacted by a lot of the other things that I've just mentioned. If your users and market is affected, the immediate impact that has on you is on your capital, right? Once you do these other exercises well enough, right? What I would suggest is, firstly, understand these exercises. Secondly, assess the probabilities and the impact of all of those things. And then thirdly, what are your mitigations to that? Okay, so the first step is always identification. And then following that, those other three types of exercises are invaluable in making those practical outcomes. Okay, so extension on the capital, right? Cash flow and fundamentals are absolute kings for your business right now. At any given time, especially for an early stage company, cash flow is absolutely critical, right? However, I can't emphasize enough how much of a focus this should be on your business during this period, all right? Everything you do should be based around how much cash you have in the bank and the subsequent runway to follow from that, right? The reason that's so important is because there are so many unknowns at this point in time, in terms of revenue you're making, in terms of fundraising, which I'll get into a bit later on, and so much volatility. You need to de-risk yourself from anything that can go wrong, right? So the key point here is extension of runway. That's the outcome you want to get to, right? And for those of you who might not be aware, runway is effectively how many months your business has to survive based on your projected revenue and your projected expenses, basically, right? And the key is, in a normal scenario, 3 to 6 months might be okay, right? For example, right? Just as a comparative purpose. In this environment, you want to extend that to 10 months if possible, right? If you've got normally 1 to 2 months you think is okay, extend that to 3 to 5 months, right? Just because of the uncertainty you've got to play with for the next few months, right? What does that mean in terms of what you have to do? It's essentially you either increase your revenue or you reduce your costs, right? Revenue to an extent is less out of your control now than it was before for most types of businesses. So the real controllable factor you've got is your expenses, right? So you reduce your burn rate, which is the amount of money that's spent into the business on a given month, right? The key and most effective way to reduce your burn rate is to reduce your fixed costs, right? Fixed costs are essentially costs that go into your business regardless of business activity or revenue you're generating, right? Key examples of fixed costs are salaries and rent, for example, right? These are the things you need to think about creatively to reduce to extend your runway, right? I'm not saying to go out and fire people. That's not what I'm saying. And I'll talk about that a bit later on as well, right? However, the priority is to reduce costs as much as possible on an ongoing basis and be creative about how you're spending money. That's really, really tightly related to return on investment, okay? Which are essentially variable costs that are tightly related to return on investment. Okay, so some practical considerations here are, say you've got a sales team, right, that may be on salaries, consider having a bigger component of their remuneration to be commission, right, and reducing their base. Right, that's one example. If you're working with marketing agencies or marketing teams, right, again, try to realign the way you're paying for those to be outcomes oriented instead of a salary or a retainer, for example, as well. Okay, so there are several examples of that you can do. Okay, another thing you need to do is focus on profitability a lot more than before, right? The traditional Silicon Valley mindset has been growth and solving customer problems is much bigger than anything, right? That mantra has been changing recently, right? Partly due to a lot of things we've seen in the media, in the past, such as WeWork, etc. The mindset of that is changing, as it should have been changing for a while, right? However, a situation like this will only accelerate that need. Okay, so focus more on path to profitability rather than burning money to grow. Okay, to get more specific about that, it's really a unit economics, right? If you guys aren't really across the unit economics, it's a discipline you need to force yourselves to learn, right? And this is an unfortunate thing for most people because it's boring as hell, right? And a lot of founders, it's not natural for you to be excited about that granularity of numbers, as you see on your left there on that screen, on the picture on the left. However, it's essential, right? Especially in this environment. And these are things like customer acquisition cost. These are things like burn rate. These are things like customer lifetime value, right? And more analysis on the cost side, such as ROI factors, all right? So focus on those a lot more and build and make your decisions around unit economics and how you're improving unit economics, right? When you're forecasting things, always take conservative forecasts in this scenario, right? First of all, I would always recommend to have A, B, or C scenarios that you're forecasting for, aggressive scenarios, conservative scenarios, and a reasonable scenario. Now more than ever, right? Make your business decisions more on conservative scenarios. So the scenarios you don't like. Okay, this is really about risk mitigation. With the founders I work with, I'm very cognizant of building all three of these scenarios with them at any given time anyway, right? And I prefer to err on the extent of conservative, make decisions around conservative, but shoot for the aggressive. That's always my mantra, right? In this situation, I would say even more so, make decisions around conservative, but shoot for the middle ground in a way. Okay, really, really de-risk yourself as much as possible. Right? Don't drink your own Kool-Aid in this situation. That's basically the key takeaway with that point. And you know, as I've sort of summarized with these points above, right? The real key takeaway, broad takeaway, is business fundamentals in this environment should take precedence over rapid growth. Okay, so if you have to make decisions based on the next 3 months on how much of your budget, for example, and how much of your strategy is aligned towards growth compared to aligned towards other things, such as refining your product, such as keeping your customers happy, such as reducing your cost base, such as improving efficiencies, right? I would say always go towards that second budget, that second group of things, instead of increasing growth at this stage, right? And unfortunately for you marketers and growth hackers out there, there should be a less of a precedence on that component, I feel. And if you are growing, if you are in that sector and you do have that mindset, try to do those things in a more cost-efficient way. Okay. Moving on to the next point, right? Fundraising. Okay, so this is a question I've been asked a lot recently. Okay, so and I've spoken with a lot of founders and also spoken with more than 20 investors recently, VC investors and angel investors, and gotten their feedback on this. I'm starting to get a view on this much better than I had 2 or 3 weeks ago, because it's been changing on both sides, on the startup side and on the investor side as well, right? These are the key principles that I'll try to ingrain into you guys, right? First of all, do not rely on external capital in this environment. This is probably the most important point. Okay, so when you're putting your business plans together, when you're putting your projections together, and when you're building even resource plans, right? Don't rely on external capital at all. That should be a nice to have and a bonus. Okay, this is generally a bad idea anyway, to build any sort of forecasts and business plans around raising capital. because it's just too risky. Because essentially when you're raising capital, it's not in your favor until the money's in your bank, right? The probabilities are not in your favor until you receive the money. Therefore, if the probability is not in your favor, it's not prudent to make business plans around that. That's business strategy 101, right? In this scenario, that's even more so the case, right? So the second thing I'll say is try to get a better idea of how the investment criteria from an investor's point of view is changing, right? This is very much linked to the point that I emphasized before about business fundamentals. Investors now are very much looking at companies that are resilient, that have stronger fundamentals, that have a clear path to profitability, right? And can deal with adverse situations, much more than the hyper-growth 100x companies that they might have been looking at a few months ago, right? As I alluded to before, this dynamic's been changing to an extent, but it's really been accelerated during this process. Okay, so if you're a resilient company that has strong fundamentals, you are more attractive to investors, more so than before this scenario, right? So be very cognizant of that, both in terms of how you position your business and in terms of how you position for investment and you converse with investors, right? So be aware of that. Okay. The other thing is understand where investors are coming from and their position right now, right? They're in a very difficult situation as well for the most part, right? When I say investors, of course, there are different types of investors, right? There are really three broad types of investors. One are angel investors, right? That are individuals with money. The second are venture capitals, which are essentially institutional funding where people invest on behalf of other people, right? And the third are a corporate venture capital, right? Which are big enterprises or corporates that make typically strategic investments, right? All of these types of entities or groups are differently affected by this environment, right? So for example, a lot of angel investors I know have literally lost hundreds of thousands of dollars on the stock market, right? Therefore, their propensity to invest is a lot less, right? Secondly, with VCs, many VCs have LPs. LPs are the limited partners, basically. They're the ones that put money into VCs. LPs have reduced investment volume into VCs, right? So they've got less money to play with at the moment as well. And of course, corporate venture capital, this all depends on the enterprise, right? You've got to make a call on whether that business is doing better or worse as a result of this environment, right? And that I can only imagine would affect their investment decisions. So understand where they're coming from. Having said that, there are a lot of investors who have the capital, right? But are waiting. They're holding and waiting. That's the biggest pattern I've noticed, right? Even the ones with capital are holding and waiting and observing, right? This leads me to my next point, the last point here, right? This is what we're essentially seeing from an investor's perspective. This is due diligence reality television. That's the way I describe it to founders now, right? So the way founders and businesses are reacting to this situation and executing during the situation and how they come out of this situation is the best form of due diligence an investor can think of, right? Much more than an investor deck, much more than a financial model, much more than how good your pitch is. And even to an extent more than historical and traction factors, right? So be aware of that, right? I would never, ever suggest that you make core business decisions based on investment outcomes, right? I don't think that's a good idea in any situation. However, when we're talking about investment and you are positioning yourselves to fundraise, just be aware of how investors think and optimize your probabilities of fundraising, essentially, right? So that last point is a very important point in my opinion, right? A lot of investors are looking very carefully at how businesses are doing right now. Okay. So strong leadership, right? So this is a really, 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 really important factor here, right? And this is a very broad topic as well. I divide leadership into soft skills and technical skills, right? And in this situation, both those things need to really stand out, right? I'd say more so the soft skills, more so the soft skills than the technical skills, right? But anyway, let's go through different components here. Okay, so the first thing I'll say, probably the most important thing, is be intentional and be decisive right now, right? The reason I say that's the most important thing is probably the single worst thing you can do, right? The worst thing you can do is do nothing in this stage, right? It's do nothing, right? I mean, obviously you can do much worse things like throw money at something when you don't need to, when you don't have much money, right? Obviously that's a terrible thing to do, but that goes without saying, right? But do not do nothing in this situation. Take things into your own hand, be proactive, try to be predictive about things, right? And be very intentional about what you're doing, right? And there are examples of some of these that I'm going to go through soon, right? Have plan B, C, D, E. Okay, so when I say that, normally you should have plan A, B, C scenarios anyway, right? But this is very prudent management in this case to have different scenarios in place, right? And again, those scenarios could be based on factors such as losing major customers. It could be factors such as your operating effectiveness reducing significantly, right? It could be, and it could be a bunch of other things, right? As well. It could be user behavior changing, right? So assume worst case scenarios potentially, right? And have B, C, D, E plans in place to those. If you do that properly, in theory, you won't fail, right? Make hard decisions, but consider all options first. Okay, so the most common type of hard decision now that leaders have to go through is letting people go, right? The reason for that is because extending your runway is critical. Survival is critical. Therefore, extending runway is critical. Therefore, reducing cost is critical, right? For many businesses, the biggest percentage of the biggest cost base, and especially the biggest fixed cost base, is salary, right? It's quite often an easy thing to do to reduce that very quickly by basically getting rid of people, right? What I would encourage you to do, if you're in that position, is to look at all options first, right? Look at every possible for you, people go, right? For example, is it possible to reduce their salaries? Is it possible for leadership teams to take pay cuts, which I think should be done across the board, but that's just my opinion, right? Before taking salaries away from non-leadership positions, and definitely before getting rid of non-leadership staff, right? Secondly, if you are taking salaries away from your team, is there a way you can compensate or incentivize them in other ways, right? One example of that is stock options, right? I really do think this is an excellent time to pull that lever of equity and stock options if you want to firstly retain good staff, and secondly maintain a good culture in your team, right? I cannot emphasize enough how much of a big factor this is, right? One thing I do is I frequently and periodically touch base with very successful founders as well. When I say successful, I mean founders that basically have valuations of more than $1 billion, for example, or they've got an exit, or they're very profitable, right? And I asked them questions such as, if you had done things differently at your early stage, given what you know now, what would you have done differently? The most common answer I get by far is, I wish I had built a very strong company culture from the very beginning, right? These are situations that define company cultures, in my opinion. They're not really, it's not really the good situations. It's bad situations, the tough situations. So before you make decisions on cutting staff or putting them in very difficult situations, try to understand all the other scenarios that could be possible, right? On that note, integrity and transparency are critical as well, right? Be very open with your staff, right? And not just your staff in this case, but also your customers, right? I think without getting into specific names or details, right? And there have been examples in every country, in many countries, right, including Sri Lanka, of companies that either didn't manage expectations with their customers properly, or didn't communicate with their customers properly, right? And I think we've seen examples of founders and companies that have suffered as a direct consequence of that, right? Especially now with social media as it is, you will get trial by social media whether or not you believe you deserve it, right? So integrity and transparency are critical, especially at a time when people are vulnerable and people are struggling, right? It's very, very important. Okay. leaders are defined and judged by times like this, right? That's a very cliche thing to say, but I'll just leave that there so you can mull over it, right? But again, I not only say that in an altruistic kind of way, but when I statistically look back at founders I know that are successful now, they are founders that have done good things in difficult environments. When I say good things, I don't just mean strategically smart things, I mean morally correct things as well, right? And also, the last thing I'll say here is do not deprioritize your own well-being, right? Mental health is very important. I think it's a component that's not spoken about enough, right, with founders. And I think there needs to be more attention on mental health, right? Both from us as mentors and advisors and investors, as well as from, there needs to be a lot of self-attention on that as well, right? If you as a leader are suffering and you're not making good decisions, your business will suffer and your team will suffer and your customers will suffer. It is as simple as that, right? So make sure you're still having a balanced lifestyle, even though this is a very difficult time, right? I'll give an example of hard decisions, right? And team related hard decisions I want to give is, I won't give specific names here, right? But there are examples, well documented to an extent, examples of where companies have almost pulled the plug on firing up to 20 or 30 of their staff, right? But what the CEO and their team decided to do was instead of pulling the plug, they decided to crowdsource the problems with their team, right? So what they did is, instead of having a one-way conversation of saying, this is a situation, I'm sorry, I'm going to have to let you go, what they did was they sat down with every single one of their team members one-on-one and said, this is the problem of the business that the business is facing. Here are all the cards on the table. Can you help us to solve this, right? And they crowdsourced the problem, right? And a couple of companies I know of managed to get through this by creative problems that came from employees that would have been fired. It would not be the short-term solution they were after in terms of improving their cash situation, but I can almost guarantee that that the long-term business outcomes of that will be a lot better, right? An example of a bad situation, right? And you might have read about this as well, is there are examples of companies firing people on Zoom, right? And literally hundreds of people on a Zoom conference, right? Firstly, it's very unethical, right? Secondly, they will suffer from that from bad brand, right? There is no doubt. The brand implications from doing that will far outweigh, in my opinion, what they thought that they salvaged in terms of a cash position, right? So there are very good ways and very bad ways of dealing with difficult situations, right? And consider all of those options, okay? Okay, so once you've understood all the implications of your business, and especially the high-risk situations, and you've identified to an extent how to deal with those, right? Even if you don't know exactly, right? This is where you go to the next level, right? How can you benefit from this situation, right? So just some statistics for you guys. I've spoken with more than 100 founders in the last month and a half or so about this situation, right? And how they're affected by this, right? And I was a little bit surprised, right? About 50% of them said they were negatively affected by the current situation, but not to the point where it's going to kill their business or it's a serious issue for their business, right? About 25 to 30% said that, yes, it's very serious, right? I'm very worried, right, about whether my business can survive this, right? And the rest of them, so 10 to 15%, let's say 10 to 20% of businesses stood to benefit from this, right? And that's based on high level, that's based on just market factors primarily, right? Are they in a favorable environment, right? Et cetera, given the trends of what's happening right now, right? Having said that, especially having worked with that second category, right? A lot of those companies who were in very severely bad situations have flipped to be in beneficial situations, okay? That's very interesting, right? And the reason I find that very interesting, and the reason I think that's a key takeaway for everyone, is when your backs are against the wall, good entrepreneurs will really figure out how to thrive when your backs are against the wall, all right? If you're comfortable, right, I would also suggest you think about how you can benefit from this situation, right? A huge caveat there. When I say benefit, I don't mean at the expense of others, such as exploiting vulnerable customers or exploiting vulnerable competition, right? I mean doing it in a very smart way. Okay. So first of all, the first step you should do is identify trends that are happening as a result of this current situation. Okay. So an obvious trend that we're seeing is, for example, well, let's say there are two obvious trends. One is the concept of remote working and remote education, right? That's obviously picked up a lot in this situation, and I think will drive a very long-term trend forward following this situation as well, right? Another is e-commerce, for example, right? We're seeing a lot of e-commerce traffic, not only traffic of e-commerce going up, but we're having a lot of new players in e-commerce solving big problems for users and customers, right? As a result of that, okay? And what other technology trends are growing as a result as well from this, right? Where I encourage you to think, though, even deeper is not just trends that we're noticing, but be entrepreneurial and be visionary, right? Try to figure out fundamental user behaviors, macroeconomic factors, right? And real movements, long-term movements that are going to happen as a result of what's happening now, right? One of there's a term that I like called the zero touch economy, right? Or the touchless economy, right? And I think that's really going to take off, right? I've been observing China very keenly, right? And what I've noticed in China is touchless economy use cases and technologies are absolutely thriving now, right? As a result of what they had to deal with the coronavirus, right? It's prudent to look at both China and the US as being indicators of future trends around the world, especially when it comes to technology, right? And in some cases, more so China, right? Given what they've done in the last 5 years or so. I personally have very little doubt touchless economy concepts will take off, right? An example of that is, touchless payments, for example, and various other things, right? It's basically how can you solve existing problems without physical interaction? Okay, so that's an example of a trend, right? So list down those trends that you think are happening now and that will accelerate in the future, right? Secondly, understand your core competencies. Okay, so when I say that, I don't necessarily mean what industry are you focusing on now. That's a common misconception, right? When I say core competencies, what I mean is what are the things you do well? The real things that you do well that can be applied to different use cases, different sectors, different customers, and different use cases, right? For example, right? I'll use an example now of a Sri Lankan startup that I'm actually involved with as well, called Yoho. I'm sure many of you guys are aware of Yoho because they've got quite a big brand presence in Sri Lanka, right? They were essentially known as a travel company, right? And that's what consumers saw as them being a travel company, right? Having gotten to know them quite well, their core competencies wasn't necessarily in travel, even though they understood that very well. Their core competencies is in very, very good leadership. They've got an excellent technical team, an excellent branding team, right? And excellent brand presence. And the other thing they've got are lots of users through their platform, right? Those are your core competencies, right? What have they done as a result of that? They quickly understood, firstly, the need for logistics and solving a problem, right, in this environment, and very much started as how can we help people in this environment? And they pivoted in a matter of days, right, into building something called Yoho Mart, which some of you guys might have seen, all right? So the reason I say this is don't feel stuck on what you believe is something you're stereotyped with, right, as your core competency. You can definitely pivot into another use case as long as you've got the core functionality, capability, and you've got the right leadership to do that, right? Think outside the box, right? So don't be limited by your preconceptions and by the preconceptions other people tell you. This is why you're an entrepreneur. This is fundamentally why you're an entrepreneur. You have to think outside what you're used to, right? And consider the potential, right? And again, that's something Yoho did very well, right? Another thing I'll say is execute in MVPs. If you are making a pivot into a new into solving a new problem or creating a new technology, right? Do all of these things in minimum viable product mode, right? What I mean by that is do little bits to test it before you invest increasing time or money into it. Especially in this environment, the MVP mindset is absolutely crucial, right? Set yourself very achievable targets that grow as you solve for the previous targets that you set yourself, right? Because there are so many unknowns in here, right? And most of all here, even though you are identifying opportunities, don't compromise on your ethics at all, right? The reason I say that is it's very easy to identify this as a situation for you to increase prices or increase profitability because you're an essential service, for example, right? From a pure business strategy or capitalistic way of thinking, for example, and that's the way you should be thinking, right? However, try to think beyond that, right? Especially in this situation where, again, there are lots of people suffering, right? There are lots of people suffering. What is your responsible path of action, even though you can make more money from them, right? An example I can give you is food delivery in a few countries, right? There have been examples of food delivery. Food delivery is taken off, right? It's absolutely taken off in this environment for obvious reasons, right? However, there are examples of food delivery companies increasing their pricing, right, to both restaurants and to customers, right? Yes, they're more profitable, right? Yes, their numbers look better, right? And yes, to their investors, they might be doing a better job, right? However, think through all the scenarios and implications of that before doing that, right? They're raising prices on restaurants that are losing money to a large extent, right? For example, okay, so even if you don't do it for an ethical reason, right? Think about it from a brand perspective, right? I've got a strong view that you can always make more money if you do it in the right way, right? So even going back to Yoho, for example, they're trying to reduce delivery prices, right? Or eliminate them, even though they can probably increase them if they want to, right? Because that's the right thing to do. Okay, moving on from that, right? Lastly, right, beyond opportunities you have in this environment, right? Let's think beyond this environment, right? And I think you really have to factor this into everything you do to some extent. It may not affect your immediate actions because immediate actions are based on survival, right? That's priority number one, right? Survival is number one. Secondly, it's how do I do it well? And thirdly, it's what are the long-term things I can do now, right? And this is, again, a characteristic I feel that separates entrepreneurs and good leaders from, just ordinary leaders, in my opinion. It's to think way ahead of the curve, right? So firstly, the first thing to do is understand the macro environment beyond this, right? That's the first thing to do, right? So I would suggest, right, that you have to assume that there'll be a prolonged recession or a downturn even after the coronavirus has been mitigated enough, right? There are lots of theories about this. You can read 100 articles from analysts, from economists, from politicians, from SOFA experts, from your friends, from your parents, right? Everyone's got an opinion on this, okay? But it's up to you as a leader, and especially if you're managing your company and you're managing a team, to make informed decisions and assume conservative scenarios in this, right? In my view, my personal opinion, right, and this is only my personal opinion, is that there will be a recession for some time and there won't be a recovery for some time in major markets, right, which will affect the global market. Okay, so that's number one. So anything that you predict and you choose to do long-term for your business, try to factor that in, right? The second thing is make educated predictions about what will be different. I touched on a couple of these before, right? What movements of the way people live, on the way people behave, on the way businesses interact with their employees, on new technologies that are coming up, right? What sort of movements will happen as a result of this, right? A very obvious one is remote work, right? There are studies in the US that suggest, for example, that up to around 30% of the people who are forced to remote work now right, will continue to do that for at least 2 years following coronavirus, right? Because those of us in the startup world and that have been freelancers understand and appreciate the benefits of remote work, right? Traditional corporates are starting, probably should have done it a long time ago, but this environment are forcing them to consider that, right? Etc. Okay, so then start to reimagine and reposition your business, right, as much as possible. And of course, understand that you as a tech company, if you are a tech company, has advantages in being agile, much more than traditional corporates. Okay, so those are really the key things that I wanted to drill in, right? So just to summarize those key buckets, right? Firstly, it's understand the implications of your business. By far the number one, how is my business affected by this environment in all these different areas, right? Secondly, how can I improve the business fundamentals, right? Less growth, more fundamentals, and extend my cash flow at the same time, right? Thirdly, understand that capital from outside and getting it into the business is much harder than it used to be, right? And don't rely on that, right? As a business survival, especially as a business survival tactic, right? Thirdly, right, make very good decisions, right? Strategically good decisions and ethically good decisions, right? In this situation, you have to think harder than you've ever thought harder before, right? In this situation, identify opportunities, both short-term opportunities, right? Short to medium term and long-term opportunities, right? And start to execute on those because you are more agile and capable than the big corporates. Okay, thanks Hatch, and thanks everyone for joining. We will share the deck with you. And if you guys want to get in touch with me as well, through Suresh or through Hatch, or there's on the screen is my company website, or hop on LinkedIn and message me.